It's time for Charting Futures, and Abigail Doolittle's here, and you're taking a look at commodities and especially oil today.
Indeed, Romaine. Oil and commodities, that is our focus because we have a rally on our hands. Let's take a look at the commodity complex along with oil and natural gas. And we will see lots of green on the screen. That Bloomberg Commodity Index finally putting up a big day to the upside, up more than 1%, slightly more than 1%. You can see Brent crude, New York crude, all higher. Brent up 3.5%. Natural gas higher, too. And the energy complex this year has been under lots of pressure, down more than 10%. Some of these oils and gas. But today, a big rally as some of the coronavirus fears seem to be easing. Another factor, the dollar, of course, on oil. And that could be one reason we've had weakness for oil this year, because the dollar this year has been higher. Interestingly, today it's a little bit higher, too, and that's not impacting. But you can see the dollar over the last year or so in this very, very messy range, but a fairly predictable range. So at the end of December, early this year, the 200-day moving average had been breached. Back above it, it appears as though the dollar index is getting ready to strengthen, maybe even go back above 100. Should that happen, in theory, that would be bearish for these commodities, which has been the trend this year. You can see the dollar overall this year is higher, pressing on that energy complex. To talk more about this and two different views on oil is John Kolovos of Macro Risk Advisors. Thank you for joining. And before we turn to oil, what do you think about that dollar chart?
I think the dollar chart is quite interesting. If you've noticed on the right-hand side of it, there was a head and shoulders bottom formation, which actually implies a move up to about that $100 area that you had pointed out.
Would that be a flight to safety or economic growth here?
I think that's what's going on, because when you look at dollar strength and gold strength, they're both correlated right now. I would say that's a sign of bearish sentiment in the marketplace.
So you don't think the coronavirus is all priced in, at least per the dollar and gold?
I would say you might be getting close. And if we talk about the oil chart, I'll tell you maybe that perhaps we're getting
So let's take a look at your
something.
near-term oil chart, at least, because this is a great chart of oil.
Sure, absolutely. So here's a chart of oil going back to 2018. You can see that it's been in a well-defined trading range, right? Oil has always had its finger on geopolitical risk and tensions, whatnot, right? So even when things peaked up with Iran, it rallied up to 65, and the market just sold it off where it was supposed to. Why did it do it? Well, if it was going to break out, the implication would have been $80. Now we have just the opposite situation where we're at well-defined support, where if we were to break down below 50, that means we would have to get down to about $40, maybe even $38. Now the market has to make a decision right now. Are we going to break it down or not? My interpretation is not yet, okay? When I look at how deeply oversold it is on an RSI basis, right? Even when I look at the deviation between the 200-day moving average, it's very stretched. Right, that suggests you should rally. But it's also, you have these divergences here as well, right? You have the RSI starting to rise over there as well, just like it did in 2019. So I think you're setting yourself up for a bit of a bounce.
Okay, so you would be a buyer then of crude oil futures, let's call it 60, maybe even a little bit higher, but over the long term, because this chart's very powerful and it's been in play for quite some time. This is crude oil and not as bullish.
Not as bullish, definitely not. And I think it's important that we just always remember our long-term charts, right? We're so caught up in the day-to-day and the headlines. We have to remember that crude is in a secular bear market. It has been since 2019, and it probably will be for a lot longer. And my guess is eventually we're going to have to get closer to 35 or so before we say that this bear market is done. So any strength that we do get on a short-term basis
should be sold.
It should be sold.
So maybe tactical trade to buy here that sell a little bit higher, and that true trend line I think would go somewhere below 20. But that's a conversation for another time.
Exactly.